Hi, my name is Yves Rougerie. I'm the president and CEO of Vision Lithium Inc. from Val d'Or, Quebec. We're a small micro-cap lithium company with 2 and 3 significant projects moving forward. One with the potential for direct shipping ore production within the next year, and another one with a very large resource, a very large historical resource that's deemed to become the flagship property of the company in the future.
Yves, thanks for joining us. We were going to try and catch up last week with some of your colleagues when you were in London marketing, but it's good to be speaking to you now. It's another Canadian lithium story. They're popping up everywhere. Lithium's hot at the moment. I'm intrigued as to what it is that you're trying to do, what type of company, because you've mentioned, for a $25 million company, you've mentioned direct shipping ore and historic resource already. What have you got?
Well, we have a series of lithium properties that we've acquired over the last 5 years. We've been at this for about that. There's been an up and a down, and now another up in the lithium field since then. And now we believe we're getting closer to that rocket curve upward for the demand for lithium. The demand is actually going up, skyrocketing, this year, to the point where we have begun getting requests for our ability to produce or provide direct shipping ore to producers around the world. We have a property that we acquired from Nemaska Lithium 5 years ago. It's called Sirmac, and it's in northern Quebec, and it has ready road access. You could drive right up to it. It's already prepared for mining, essentially. It's a small resource. It's only about 300,000 tons in total, but about 1.5% lithium. And it's got a higher grade portion above that at the top of the deposit. And so we've been we're in discussions with several parties to produce direct shipping ore from that. And the price of direct shipping ore has gone through the roof to the point where there are recent sales out of Australia for just under $1,000 US per ton of that material. In our case, we can ship it to a local producer here in Quebec, which would cost us only about $150 or $200 a ton, or we could ship it offshore. And in both cases, the profit margin would be enormous. And so we're looking at permitting right now a bulk sample, a sizable bulk sample for next summer, followed by a mining lease in the following years to hopefully mine that whole 250 or 300,000 tons within 3 to 5 years, and at a huge profit level. I mean, we're talking, anywhere from $100 to $200 million potentially profit on this kind of operation. So it's a life-changing and impacting development for a small company like ours. And it would allow us, we have a large property there. We're only 40 kilometers from a world-class deposit, the Mobilan deposit of Sayona Mining. And we believe we have a lot of other dikes on the property. And we believe that with a lot of exploration, which we could finance without any dilution, thanks to this DSO operation, that we could discover a more significant mineralization.
Well, let's talk about that. I'm intrigued by that. You're not the first company that's come on and talked about that strategy. Okay, you guys started 5 years ago when there was a kind of spike in lithium prices, and I think lithium ran a bit. It came off, as did your share price, and I'm sort of intrigued that you kind of caught the wave, but then also fell away when that wave left. So you're thinking about alternative ways of financing, and DSO, direct shipping, or is a good way to go about that, because it potentially can get you some cheap dollars. It's anti-dilutory. Why not give it a go? Have you got the money to actually get that thing over the line as it stands?
Not necessarily. I mean, it's a very low capex operation. I mean, a DSO operation, and in our case, and that's what's ideal about our project, is that it's above ground. Essentially, it's a hill that's already been deforested and stripped and cleaned and everything else. So there's nothing to do but to drill, blast, and transport the rock. That's it. So it's like a gravel pit or a surface quarry type operation. So it's very low capex, almost nil. And very low operating costs as well. And so the money, we don't have the money to develop this right now, but as such, but we're not worried about that in the least.
So just on that, right? So DSO, you're right. It's more like a quarrying exercise.
It is.
You're blasting and shipping it on lorries up to whoever you're going to toll this earth or sell this to. It's really, really simple, but at the heart of it, you are still an explorer developer company. This is just a short-term fix to get cash to actually allow you to do those things? Or
it's an opportunity. Yeah, typically this is a non-existent opportunity normally, right? I mean, anybody with a lithium project is looking at finding 10 million plus tons so that they can finance the construction of a mine mill operation, which is going to be in the $300 to $500 million window. So in this case, for no money, basically, we're able to create the kind of profits that a mining company in lithium would not see for the next 10 years almost. So, I mean,
right. And it's important differentiation. It is incredible, or can be incredible, but it's an important differentiation because obviously DSO has a very kind of flat growth curve. It isn't flat. It isn't a growth curve. It's kind of flat revenue stream and annuity stream for the life of the quarry, we'll call it, for want of another word. Whereas the exploration and the blue sky and the scale of those things can deliver. That's what investors, really want to get into, not just kind of a kind of flat cash flow mechanism.
So absolutely.
Right. So being a mining company being an explorer in the mining game is really, really important, not yes. Some kind of
So in our case, this is an opportunity that didn't exist 3 and 4 months ago. This has come out of the blue. The demand is gone through the roof on a worldwide scale, and they're looking for product that they can put into the processing and get the material out. So that's our opportunity, and we can take advantage of it. Preferentially because of all the parameters that are favorable to us in terms of location, road access, permitting, simplicity, because permitting is important in the world today and it's pretty long. So anybody who has a deposit that's below ground is going to have to get a much more complex permitting process. It's going to take them a lot longer. We're looking at a very short time period to get the permitting. So our ability to take advantage of this high price cycle is better than most. And so that's why we're pushing hard in that direction. But totally agree with you that we have 1,500 or 15,000 hectares there, something like that. So, I mean, we don't have 150 square kilometers just to be able to mine one hectare. I mean, we have it because we want to find the large deposit, just like the Moblehead deposit, which is 40 kilometers away in the same belt of rocks, and which is a 10 going on 30 million ton high grade deposit. And we believe we have the dikes. We know that. We just have to find the lithium on that property. And that brings me, if I can, do you want to talk about that property more, or can I jump over to the?
No, I'm okay with that. I'm okay with that property. Apart from, I'm just trying to understand. There will be some capital capex outlay for that. I appreciate it'll be small. It will take some time to get to that point. So can you give me any sense of that kind of time frame? That's kind of, because it's all very good to saying it's super high margin, and I appreciate today's prices. It really is, or could be. But what's the time frame? How long are we waiting for?
Right. Well, we expect to have a permit to be able to mine a large bulk sample next summer. That's our timeline. First year production of maybe 50,000 tons. This is an exploration bulk sample, so it's not a mining lease. A mining lease is going to take an additional year of permitting on top of that, this first permit. So this is a stopgap, or I don't know what word I would use for that, a way of getting ahead and moving the project forward in the short term. And so that would be the time frame going forward. And then
what and how many bulk samples can you do? Just one?
You can only do one. That's okay. The law. So that's from an exploration standpoint, you can only do one. And after that, that's why we need the mining lease after that. And again, we expect that to be a very simple process too, because they've streamlined the process here in Quebec quite a bit. And in our case, it covers a very small area, which will already have been permitted for the bulk sample. And there will be, because it's not a mining operation in the sense that we're putting in a big camp and we're putting in big buildings and putting in big waste piles and tailings and all this stuff, the permitting is going to be much simpler because again, it's only, it's a gravel pit operation, but it's called a mine. That's basically what it is.
And when do we actually get to, when do you get a sense of the numbers. Clearly, this isn't a big economic study. It's a case of, how to get 50,000 tons, what's it going to cost us? And, how much can we sell this thing for?
Yeah.
Back
Well,
of
I mean,
an envelope, right?
Right. Any gravel pit is a nothing operation, right? I mean, you're talking about using half a dozen people at the most, because you're just drilling, blasting, and then putting it in trucks and moving it. That's it. So on-site costs are very, very low, but definitely in the $50 range or less per ton. That would be expected. And then it's a question of transportation where. So if we can transport inside Quebec, it'll be like $100, or even to ocean faring vessels will be $100, certainly less than $150. And after that, and whatever we negotiate, we will try to negotiate that being included in the price. And
Okay. So let's park that for now. You want to kind of get onto Cadillac, one presume.
Well, yeah, there's Cadillac. There's two of them. The first one I would talk about would be Godslith in Manitoba, which is our third project, and which would be and will hopefully become our flagship property, which hosts a historic resource from way back in the late 50s, early 60s that was done by Inco of almost 10 million tons at well over 1%. And this is a very significant occurrence. It's a dike that's about 2 kilometers long, and it's mineralized economically for about 1.5 of those 2 kilometers. So that's very, very significant in the world of lithium dikes. And it's only been drilled down one hole down to 800 feet, and that hole ran 50 feet of 1.5%. I'm using feet because this was work done back in the late 50s, early 60s. And so it's a very significant dike. We think that once we can drill this thing off, which is going to be pretty expensive, we'll be able to certainly confirm the 10 million ton number, but probably as we go down a bit, go to 15 and possibly even 20 million tons of very significant grade lithium. And it's a pretty typical lithium dike, just like the one we have at Sirmac or elsewhere. I mean, it's basically pretty straightforward material. So we don't expect any metallurgical complications or anything like that. We're not working on the property right now because we still have to make an agreement with a local First Nations that is within 5 kilometers of us. And so we're working on that. The First Nation allows us to have quite a good infrastructure for an isolated project. So there's a winter road, there's a power line, and there's an airport. So we think there's a lot of pluses to go along with that project, and Manitoba is a very pro northern development province, and are very proactive and active in trying to promote the northern lithium development.
Okay, so not doing anything at the moment. So what's that? How did you pick that up? What's it cost you? And do you own 100% of it yet?
We have 100%. It's 100% owned, but again, we have to have agreements with the local First Nations in order to be able to activate projects like that. That's the world in northern Canada today, and
I understand that.
That's fine. Yeah, that's the business. So we just have to do that. The cost to us was, I think it was 4 or 5 million shares. That's it. A couple of years ago, we acquired this back in 2019, just before the last lull in the price of lithium. And so we left it kind of dormant for a couple of years and then picked it up again last year. And the pandemic, of course, has slowed down everything for us. Pandemics have affected the northern communities quite terribly compared to the rest of the country, and because they're isolated. And so that's limited our access to the people and discussions and negotiations and visiting. And so we're just getting out of that now and hopefully moving towards a positive outcome for this.
Okay, so you're doing things the right way, and that takes time. Have you got an idea of what you want to do once you've got through that process? You've got the approvals that you need, whether
Absolutely.
it be permitting or First Nations, right? So, like in terms, and can you get that to me in terms of dollars, meters, however you want to?
Oh yeah, the first pass there, because it's so long. I mean, it's 1.5 kilometers. That you're going to have to drill this off at least on 100 meter centers. So you have about 15 sections. Each one is going to be 1,000 to 1,500 meters. So you're looking at least 20,000 meters to 30,000 meters in a first pass to get an indicated resource. And that's going to cost in the $20 to $30 million range. So that's very expensive, and that's where the development of our DSO opportunity is also very important, because we could be in a position to use free cash flow to do that. And the important thing to consider is that a resource such as the one at Godslith now, let's say this 10 million ton historical resource in the market today, that's worth a couple $100 million on a market cap easily. And if we can increase it to 15 and possibly more, and possibly find other dikes, then it can have a very significant impact on our market cap and on our longer perspectives or prospects in the development of lithium assets out there in Manitoba.
Right. Okay. And look, and I'm having this conversation with you in the context of lithium's on fire at the moment, but it will continue to be, because the supply-demand fundamentals suggest it will be. Most people reference EV revolution as the main driver for that, but there are other things too. So therefore, with regards to Godslith project, it is dependent on Sirmac happening, starting, and cash flowing, because if you're looking for 25-30 million to unleash the potential there, with whatever you're, 25 million market cap company now, share price 11 cents. That is super, super expensive, super, super dilutive, and it would not make sense. So this alternative solution of yours is critical to you.
Yeah. You're absolutely right. I mean, to do it, we would have to, either super dilute, or else we would have to joint venture or sell a share, sell royalties, whatever. And of course, in this market, we can do a lot of that if we want to. So those are choices that we can make as we go forward. But yes, you're absolutely right. It's pretty.
And the reason I say that, Yves, it's really why it's really important to kind of have this conversation now, is because it should define the type of investors that you attract. There's no point in attracting people who are going to be looking at the share price on a daily basis with this strategy of yours, because they'll be super upset and presumably directing their ire at you. But for people who are prepared to wait for this strategy to play out and for you to be able to unleash the potential of Godslith, this is something they need to be aware of. So I just wanted to kind of get you to articulate that. Can we talk about Cadillac as well in terms of what the potential is for that, how you play that?
Yeah, absolutely. But again, so as a microcap, we have choices to make, and so this opportunity of the DSO changes the whole game for us and allows us potentially huge difference in how we approach all of our projects and potential acquisitions as well, and ventures with other people. So to go to your question, Cadillac. So Cadillac's the third asset that we're working on right now. And it is in the Val-d'Or mining camp itself. So its advantage over the other two and over most lithium projects, which in most cases are in isolated areas, is that it has infrastructure galore. So we're only 10 kilometers south of the Trans-Canada Highway in the Abitibi mining camp, and we're only about 10 or 20 kilometers away from two major gold deposits. So all of the infrastructure for mining and personnel and everything else is there. And all the costs, of course, are probably half of what they are in the more northern reaches for this. So this project we only acquired a year ago this month, essentially, and it had a known dike on the property. So we picked up 30,000 or 30 300 square kilometers around, or 200 square kilometers around this occurrence. And what it is it's a series of small dikes, so they're only 5 to 10 meters wide, and they're known for about 300 meters along strike, and they're only about 100 meters apart, parallel, and there's at least half a dozen of them, if not more. And they've never been sampled, just a couple of samples, and they've never been drilled. So we went in and we did a drill program in the spring and got good and mitigated responses. So on surface, we did some stripping and found lithium mineralization over the whole length of the main dike, which was 300 meters, with a lot of very large crystals, up to half a meter long. And then we drilled and we got mitigated results. So instead of getting nice continuous mineralization, we would get spotty, erratic, high-grade results. And so we stopped the drilling after about 3,500 meters. and are waiting still at this day for some last assays to come in, and considering the geology and reviewing the information from the drill program to assess how to approach this going forward. So very significant occurrence in a very positive setting, geographically and otherwise. And on the entire property, we did a lot of exploration during the summer. We had field crews out there, and they visited about 1,000 different sites and took samples from over 500 dikes that they discovered. And we're awaiting for many of those results still, but we have identified 1 or 2 or 3 areas within the 200 square kilometers where we think good follow-up is required in search of pegmatite dikes with lithium mineralization in them. So we didn't find any this summer, but it's only the first year of this program. So we have to try to figure out the geology, understand it, and follow up on what we did this year, next year. So a very exciting project because of its location in particular. And last thing I would add, the last thing is that since we acquired that property, we've been surrounded for tens of square kilometers by many players. Winsome Resources has acquired a large block around us, and Brunswick Exploration, a very large block around that. And so that this is an area where there was no staking, no exploration or whatsoever. And today there's an area of maybe 50 kilometers by 20 kilometers that's completely staked and open for exploration by junior companies, mostly looking for lithium. So it's a very interesting development.
Yeah, but I guess our challenge as investors is trying to work out who's just jumping on the bandwagon, the lithium bandwagon, and who's actually going to succeed. So I'm sort of intrigued by the strategy you're employing, and I'm keen to understand the time frame for that. So Sirmac clearly is critical to success of all of the above. Certainly, if it's going to be done with Vision Lithium. You built up a bunch of there's some other assets in the portfolio too, which we can talk about another time. I don't want to kind of cloud people's view of this right now, but timing wise, I mean, as we said, the type of people who need to be on board with this have a long-term vision, long-term hold. Attitude to investing with you or in your company. How quickly do you get to the point where you have got money from Sirmac to allocate to Godslith or Cadillac or however you want to, prioritize?
Right. Well, I mean, we believe,
it's as simple as that, isn't it?
Yeah. We believe that's the case. Absolutely. I mean, it's life changing for a micro cap to come into money, especially big money. And so by this time this year, we should be. I mean, according to all.
By this time. Sorry, by this time when? By
this time this year, next year.
Right, next year.
Okay. So in late 2023, we should have wrapped up the bulk sample, and the bulk sample will essentially be sold, if not ahead of time, certainly on time. So we see the future with a lot of hope. Yeah, we think it's going to be a great year in 2023.
Okay, so 50,000 tons. People, I just want to help people be able to do the math. 50,000 tons at, let's say, plus 1%.
Oh yeah, it's well over 1.5 actually.
Is it?
Yes, it is.
All the way through.
Yeah. Certainly the bulk sample is well above 1.5. Yes.
Okay. Well, how do you know it's above?
Because this deposit has been drilled off. There's a resource on this deposit, and there's with the resource comes usually a mining plan, so a pit plan and everything else. And with that, we know from past work that this upper 50,000 tons that we want to take out runs well above 1.5.
Okay. 1.5, 50,000 ton. Pick a price.
Well, I mean, again,
cost. You reckon it'll be sub $50 a ton?
The cost?
Yeah.
Oh, the cost for mining, yeah, absolutely, yeah, no more than $50.
Well, let's double it. Let's say it's 100.
Let's say it's 100, right? Yeah. It's a good game to play. Yeah, let's say it's
you're making money. You're making money.
No, you're making a lot of money. Because, I mean, if the stuff is worth $1,000 US, well, that's right there. That's 1,300 or 1,400 Canadian. So if your costs are a couple hundred Canadian, you can see where the profit margin is. And then it's just a question of who can you negotiate with to sell this to. and at what
Right.
price.
And what are the company killers in that, in the sense that what's going to stop you from being able to deliver that plan at Sirmac?
Well, I think the permitting, there is an outside possibility that the permitting would limit the size of the bulk sample, or would require additional studies. But our experts have indicated, our consulting experts have considered, have told us that they don't think that's the case. They think it's a pretty straightforward process, and that we're because of the parameters again of the site and the site preparation, that we'll likely get this permit in due time, in a proper amount of time. So we don't expect any surprises. We don't see any surprises coming, but they can, because that's permitting. But
so you don't expect any surprises on the permitting side. Are there any other aspects of this that we might need to be aware of?
We have, and we can't name names, but we have at least 3 parties discussing, acquiring this material. So we're not looking for anybody. So we anticipate that if we had any problems with them, we could talk to others. So I think we don't want to seem cocky, but this seems like a really good affair developing for us.